Hey folks, welcome back to Finance Fridays. I'm your host with Lucas Ballahood with Coldwell Banker RMR and the Ballahood Group. I'm joined again today by my good friend Alexandra Job with RBC. Alex, how are things with you?
Pretty good, thanks.
Good, good, good. Well, we've just rolled out of the Canada Day weekend here. How did you spend your holiday?
Oh, we were up north with their family.
Oh,
What
that's
would you
good.
guys get up to?
We actually were doing the same kind of thing. I managed to get on the boat a little bit, do a little bit of fishing with my future brother-in-law, which was an exciting time to spend on the water with him. It was actually my first time fishing all summer. So,
Oh, really?
historically speaking, my pre-child, I was gonna say childbearing days before I became a dad, it was much easier to get up there and get out and enjoy some time on the lake and stuff like that. But these days, it's a little more challenging. So haven't been up there quite as often as I typically would like to, but that's life.
For
So
sure.
I think I would just want to chat a little bit this week about sort of what's been going on in the world here in Durham region.
Hmm.
Today is I think where we at July 6th as we record this call here. Recently the market stats just came out from Durham's Association of Realtors, and
Hmm.
we saw another price shift or price drop. This time it was, previous months it was around 6-7%. It was around 5.6% this past month. We're down to 969,000 as an average sale price across the region. Summertime's typically a slower time. I don't know how you find that on the mortgage side of things. I expect you would, but it's typically a slower time, because
Hmm.
people, are starting their summer holidays, school's out, and all that kind of stuff. So as the holiday season starts, we typically do see a slow period here over the next couple of months. You do too?
Yeah, it's the same on our side for sure.
Yeah. So, like homes are sitting on the market a little bit longer. Our days on markets, almost 2 weeks now. Our percentage of our months of inventory, I should say, is gone up to 1.5 months. So basically, if no more new homes or new listings came on the market available for buyers to purchase, we'd have no more homes available in about 6 weeks. So, I
Well,
mean, significantly more, probably double than what we saw a couple of months ago.
hmm.
We're sitting around 2 weeks of inventory on the market. But now we've got considerably more options for people, so buyers are really taking their time
Yep.
and not willing to overpay. Interest rates are obviously going to have a big impact on that, but that's not a bad thing. We're heading into more of a balanced market, and as time passes, more sales are going to happen in these price ranges, and buyers, or sorry, not buyers, but sellers will just become more, say, acclimatized to sort of what the market is now, rather than looking at those wild numbers we saw in the winter and springtime.
Hmm.
February, March was that peak in the market, and they're going to be drawn away from those numbers because they know they're not going to get that anymore.
Yeah.
We've saw a lot of that tug and push and pull between buyers and sellers lately, from the last couple of months, just because they were referencing those previous sales and trying to get those numbers. Can't
Hmm.
fault people for that,
Right.
in terms of having those expectations, but the market just isn't bearing it anymore. So, as your neighbor's house down the street sells, and then, a couple streets over, another one sells, those are the new comps that they're looking at, rather than the ones from before that were
Yeah,
drawn.
you always have to do that. It's always moving and you have to adjust with whatever the market's doing at that time, right?
Yeah, constant education as we're kind of going through this process, and it is going to be a good time for buyers because prices are going to start coming down,
Yes.
and as you get towards the end of the summer, historically speaking as well, deadlines clear the mind, right? And what's a big deadline at the end of summer? School starting. So if someone's got plans to move this year, whether you're a first-time buyer or in the resale market,
Hmm.
even investing, if someone's got to move before school starts and get the kids settled and all that kind of stuff, there's going to be a pressure point there for buyers to maybe, let's say, take advantage of, in a way.
Hmm. Hmm.
The cards have been all in the hands of the sellers for the last couple of years, so it's the buyer's turn to maybe get some good deals in the market if they're available to be had, and that deadline there at the end of the summer should be a pressure point they can utilize.
Yeah, for sure. I was going to say with these prices coming down, like you said, it's opening up that market for these people that have been on the sidelines that have wanted to get into owning a home. So your first time buyers and that investor, right?
Yeah, exactly.
There's
And,
still
and you
lots
know
of
what?
people.
There's a very common or popular term that you may have been heard of before. It's not new. I'm not the inventor of this, but I'll steal it for the day.
Uh-huh.
It's called house hacking. So like,
Okay.
a first time buyer, very popular strategy to take where they buy a home that maybe has potential to add a secondary unit into it, maybe the
Yeah.
basement, for example, because there's a separate entrance or something like that. Maybe there's already an in-law suite down there as an
Yeah.
example, and you can rent that out to help supplement your mortgage,
Yeah. So many
right? So,
people need that, right? With
yeah, and
the
you know it's pretty common again too, as as in-law, as family members, parents start to get a little bit older. There's that discussion that as their independence sort of starts to I don't want to say deteriorate, but I guess I have to because I've already done so. So as that independence sort of they lose that independence and they need some more support in terms of their daily living, then they
yeah.
move into the basement, right? So
Yeah.
moving with their kids, and that's a very common thing. So there are a lot of homes out there, more than probably we have seen in the past, that have those kind of amenities in there already. So those homes are on the market, and those are
Yeah.
a great way for like a first-time buyer or an investor to put their money into because they can rent out one of the units to supplement their mortgage.
Yeah, it makes it so much more affordable for both if families are coming together or for the home buyer if they're renting out a room or a part of the house. And what
Yeah.
was the terminology? House hacking. I like that.
House hacking. So yeah, I couldn't tell you where I learned it from, but that's just something I've learned about in the industry the last while. Is it's just a new phrase that's come out.
So the
it's been around forever, but it's one of those things where sometimes people will go in if it's got an unfinished basement or it's just a
yeah,
gated home, and they'll go and they'll hack up the house in order to accommodate an additional unit somewhere, right? That
right.
they rent out that's got a separate entrance and living quarters, potentially a kitchen and all that kind of stuff, right?
I
So
was going to ask you, do you find you still have buyers in Durham region that the price is still too high so that they're going looking to the outskirts of Durham, or let's just say heading a little further east, or what are you
yeah, actually,
finding?
yeah, we have had a number of folks in that game.
Still happening.
It's even during the pandemic. There's that adage, whether you've heard of this one or not, too. I've got all these euphemisms I throw around. But you drive until you qualify. Now that doesn't rhyme as well as I wish it did. But so that's sort of what people were doing. They just until they could afford a home, they just kept driving, right? So some people were moving to the Trenton area, Belleville, Quint, that way towards
Mhm.
Kingston and or even north. So I've been spending time in Peterborough as well. And there are a lot of folks that are looking in those areas just from an affordability standpoint, maybe from a lifestyle standpoint too.
Yeah, there's
Um,
nothing wrong with that.
yeah, they know, and just by comparison, now the Peterborough numbers haven't been released yet, as far as I've noticed. But the average price here, or in May back there over in Peterborough, was around $830,000,
Oh,
if
okay.
memory serves me. And compared to Durham region, it was 995 back in May. So there's a big difference in the
Yeah.
average home that can
Yeah.
really impact what someone can afford. So that's where you see that a little extra time on the road comes into play when we're out there looking for houses.
Yeah. Yeah. No, I know that that entry level price point is kind of it's a high demand and hard to not hard to find, but just like, you know, what that used to be and what it is today is certainly different. I know you wanted to look at an example of just like a carrying cost of something below the average price because we're still feeling that that's high for our first time home
Well,
buyer market.
yeah, and you know what? There are a lot of properties. I've been working with some investors that are looking around Oshawa, for example, um,
Uh-huh.
and you're looking at potentially two-unit properties.
Yeah.
Depending on the different pockets in Durham region that you're looking in, you can find those opportunities that are in that 650, $700,000
Okay.
range. So that's actually what I wanted to ask you in terms of an example ahead of our call today, just in prep time. What would a if we're looking at, obviously the interest rates today are different than what they were 6 months ago. So in today's climate where interest rates are a little bit higher, what would that look like on a sort of a cash flow perspective? So looking at, because I'll take a step back for a second. We've got our mortgage payment, we've got our insurance, we've got our taxes that sort of,
Yeah.
and then your utility costs and all those kind of things that come into
Mhm.
what your carrying costs are for a property,
Yeah.
right? So all those different components, come together. When you're renting a property though, or maybe you're renting out part of the property, it helps supplement those carrying costs, So
For sure.
right, it decreased that quite a bit. So, an example of, be able to find that payment of a $650,000 loan, and maybe we kind of break that down a little bit and see, like, try and show people how they can, do that math and evaluate different options as they look at maybe purchasing a property, and what might make, or and then what it looks like when one actually makes sense.
Well, being under $1 million, you do have the option to do an insured deal, right? With a minimum down payment. And at 650, let's see here. Now, this would be an owner occupied dwelling. At 650, your minimum is going to be just over that 5% down. So it's closer to 6%, it's 40,000.
Okay.
And with that, of course, you're going to have your CMHC, your default insurance premium that's added to the total loan. But when we look at carrying 650 with the minimum down, it was about $3,700 a month.
Okay.
So that might be a lot for one individual, but hopefully dual income there, or rent with a family member, or eventually, put in a second unit or something to cut that what the house hack.
Yeah. Well, that's what I was going to say. Like, if you
Yeah.
can rent let's say that you have the opportunity to put a 2-bedroom unit in, you might
Yeah.
rent somewhere between $1,800 and $2,200 a month. So for easy math, maybe that's $2,000. So if my mortgage payment is 37 a month, I'm going to get $2,000 from a renter. So that's $1,700 is what I'm responsible for on the mortgage side. Then I just got to take care of my property tax and my insurance and maintenance.
Yeah, and that's so
that
much more
really
affordable.
That's a lot. That really helps. From the bottom line, if you're a first time buyer, in those under those conditions and circumstances.
For sure. And then also, if you were doing like that 650 purchase with 20% down, you don't have your default insurance premium added to the total loan.
Okay.
Okay, so that's a bit of a savings there. And you can take the mortgage up to a 30-year amortization, so that lowers the payment. When I looked at that, it was just less than $3,000 a month. It was $2,900. So
there you go.
yeah.
So, okay, so from that example, so if it's an investor who's got some cash, maybe they're going to pull a line of credit on their existing home, for example.
Yeah.
So they're going to put their 20% down with you guys. So you said it was a little over or a little under 3,000?
Just under 3,000 a month, which would be the mortgage of 520. Yeah.
Okay. So yeah. So again, so let's take a step back. Let's say I'm not going to live in the house, but I'm going to look for a 2-unit dwelling. So maybe there's two-bedroom units there. So it's for easy math again. Now I'm making money on my mortgage.
Yeah.
Right? Because my
I think with the way rents are going, and because they've gone up so much, you'd be breaking even for sure on something like that. You get 2 units in there, and then making. Let's say
you're making money, and that's before your property tax. That's before you use your maintenance and insurance and all those things. You're coming out ahead just on the income versus what your mortgage payment's going to be. Then we've got to add on those other costs and figure out what our net will be in that situation. Right now, again, if you've got an investment property and maybe it's not cash flowing positively currently, and if there's maybe a little loss there, maybe it's $100 a month or something.
Okay.
So that it works out to $1,200 a year. You can write that off against your income taxes.
Right.
Right. So there are benefits, even though there might be an investment that's a negative cash flow situation. There are some benefits when it comes to your tax season next April.
Right.
Right. So there are advantages, in different avenues.
And I think the grand scheme of it is that you need to look at real estate as a long-term investment, right?
Absolutely. If someone is in the flipping game and, if they bought a house last year and they're just planning on flipping it this year, yeah, you're still going to have made money on it, right? The average price is still up. I think it's something like 12% from last year. This time. So you're still making money on a year-over-year basis.
Yeah.
But definitely when you're investing in real estate, if you've got a portfolio of whether they're residential properties, maybe they're commercial income properties, you are playing in the long game there. And you're trying to hold on to those properties and accrue that equity. And that's really in the long run how you make your money.
And leverage one and then buy another and leverage another and then keep going. Don't get me started.
Well, and you must have a number of clients that do that kind of thing where they add more properties, more doors to their portfolio as they look to buy the next one, reassess the values. We've accrued so much equity, we can pull that out and use it for our next property, right?
I love helping clients do that. And I've been in this for long enough period of time now where I've been like their mortgage specialist at the first time home buyer stage, and now they've got acquired net worth of real estate, which is so cool.
Yeah, it's awesome to see them grow that wealth over time, right?
We can
Yeah,
do it, Luke, you and I.
yeah, like it can be done. There's lots of people that are making money in real estate for many, many years. It's a secure investment relative to things like the stock market. If anyone's had money in crypto recently, like that market's been going through a lot of ups and downs the last little while. And in terms of the security aspect of it, it's a much more secure investment historically, because even though real estate's going through a bit of a downturn right now, there is going to be a point where it's going to come back up. So,
Yep.
it's
Hang
the ebbs
on.
and flows in the markets.
Yeah.
So, well, that's awesome. Now, Alex, we are 2 weeks away from our annual Coldwell Banker Charity Golf Tournament. We still have not been out to the driving range.
Yeah.
So I have to continue to press that button. I might have to pull you with me one of these days here. If I get an afternoon to hit the range for an hour, we're going to have to do that.
We're too busy.
But it's the way things are going. But July 21st, folks, if you're interested in participating, all the proceeds from the event go to the Boys and Girls Clubs here in Durham region and over in Kawartha Lakes. It's up at Black Diamond Golf Course, just up on the 115 on the way to Peterborough there. So we're about 2 weeks away from that. It's going to be a great day, as it always is. And for all the folks that have already registered, we look forward to seeing you there. And those that are thinking about it, certainly reach out and we'll get you on the list. So with that, I think we've had a pretty good chat today, Alex. I don't know what we're at running time here, but it's been a good one. And I hope you have a wonderful rest of your week, and I look forward to chatting with you again next time.
You too. We'll do it again soon.
All right, folks. So that's all from us today. Feel free to follow along, like, subscribe, all those good things, and you'll find our contact information at the end of this video here too. So until next time, have yourselves a great day. Bye for now.